Hi, this is Zach here from Zach's Traders Cafe with a look at the major markets on Friday, the 10th of June. Starting off with the FTSE 100 and slightly more ominous now. We're still in that range between 6150 and 6300, so there's no real reason or compunction to change the range trading. But yesterday's Thursday's session was one where the market opened at the high, closed at the low, which is a negative. We've also broken this little RSI triangle as well below the 55 level. And there's a bull trap in place really with that late resistance for May at 62.90 just cleared, and then we're back down again. Probably the best thing here to do is to wait for a break back below 61.48, which is the 200-day moving average and also the uptrend line from the beginning of the year. But if you are an aggressive bear, then you probably would be going short with a stop loss above 6,300. For the DAX, also shaping up for the bears at this stage. We really had the lower high for the beginning of June versus May and April. Could be a triangle breakdown here below, well, from as long ago as November, but below the 50-day moving average of 10,038, so not very far away. In the meantime, one can trade the 50-day line as support. We're just looking a little bit like we've had a double top, an exhaustion feature as well, below 10,300 for the DAX. Breaking 10,038 will then take us back to target 97.37, which was the May floor. Onto the US markets, and it's a different picture there, still on the bullish side, holding 17,900 for the Dow, that broken April resistance line, and the 50-day moving average at 17,784. Above those two areas, one would still be looking for gains towards 19,000, although that sounds a little bit more ambitious than it did even a couple of days ago. For the S&P, even more bullish, if anything. Support above the 10-day moving average yesterday, 10-day line at 2104, and really, while there's no end-of-day close back below that, one wouldn't even blink as far as the upside scenario is concerned, and a potential 2200 plus target, which is at the top of a rising February price channel. Not quite as bullish on the Nasdaq. We're back below the 10-day moving average there, the green line. But while there's no end-of-day close back below 44.80, which was the initial June support, targets towards 4600, 4700, 48 still on board as realistic areas for this market to chase. The other point of note, probably 45.22 was the top of that April gap, and if you are cautious, maybe you wait for an end-of-day close back above that before going long again. Onto the currencies, and cable, slightly weaker emphasis here really, back on the, well, towards the 50-day moving average at 144.30. That's initial support. The main, let's say the Brexit line, 143.50, which below that one would be looking for a Brexit Buffett still on the Remain side. That's running just really where the June floor was, 143.53. And so we'll wait and see whether that can hold over the next couple of sessions. We have had this RSI break, which happened as long ago as the end of last month, which is a leading indicator on the downside, but not a definitive thing unless we break the RSI level there below 40, really below the 40 level. So just on hold really as far as this market is concerned, rather than sell just yet. Any aggressive traders really looking to sell into strength with a stop loss above 147. Onto euro dollar, and here we can see that a bit of a pause for breath here. Looks like 114 could have been a top here for this market. We're back below the 50-day moving average at 113.12, and the longer we stay below that, the greater the chance of a 112 test, even if this market doesn't break down any further than that. For the yen, interesting that we actually found support at a relatively obscure line here from February. That was at 106.25 yesterday, and bounced quite well off that. But still, we've got the hint that we need to test 105.55, last month's floor, before this market can finally get off the ground. If you are looking for a momentum trigger on the upside, it would be an end-of-day close above the 10-day moving average at 108. 2023. Finishing off with gold, and here it looks like a pretty straightforward move to the upside. While there's no end of day close back below the 50-day moving average 1248, that would take us up to 1350, the top of a rising trend channel from January over the next month or so. That's it for me. More updates at the same time on Monday.